Krystal, what are you taking a look at?
Well, once upon a time, America was a land where it genuinely seemed like a rising tide could lift all boats. When American corporations thrived, they were able to invest in their workforce, creating a stable middle class, and they were able to invest in innovation, which created dynamism and more thriving in a virtuous circle. In that time, business leaders and politicians, they had healthy debates about exactly who corporations were meant to serve: the nation, the community, their shareholders, their workers. But pretty much no one took the view that they should be run by the executive class for the sole benefit of the executive class. Today, however, this perverse conception of corporations is destroying the health and vitality of our entire economy, creating bubbles based on fakery, robbing employees of fair compensation for their labor. In fact, new numbers underscore just how extreme and radical this modern form of corporation has actually become. Take a look at this. This is from Ralph Nader. He says, "Stunning figure. The White House's National Economic Council reports that major corporations are spending about 90% of their earnings on stock buybacks and dividends. 90%. What's left for investment? Not much, unless these corporations are taking on debt," he says. Now, stock buybacks are exactly what they sound like. It's when a corporation buys back their own stock. It has the predictable impact of at least temporarily goosing that company's stock price. So, rather than investing in innovation or expansion or their workforce, our largest companies are all funneling almost all of their cash right now into the pockets of wealthy shareholders and, critically, their own executives who derive most of their compensation from their stock holdings. It is a blatant CEO money grab. Now, I know the discussion on stock buybacks, it can sound kind of wonky, but it is hard to overstate just what a damaging effect their near takeover of the marketplace has had on our entire nation. First of all, these stock buybacks make the stock market completely fake. In fact, they were deemed illegal market manipulation repeatedly in 1967, in 1970, and again in 1973. It wasn't until the market radicals grabbed power under the Reagan administration that they were even allowed and legalized. Over the past 9 years, stock buybacks have come to completely dominate public markets. Corporations plowed an eye-popping $3.8 trillion into buying their own stocks. That was more than any other type of investor combined. Think about that. The stock market, it's supposed to theoretically reflect some underlying value. Instead, it increasingly reflects just how much financial rigging corporations are willing to do. Second, stock buybacks reward financial engineering over actual productivity and innovation. Trump's massive corporate tax cuts, they were theoretically supposed to unleash corporate research and productivity enhancements, expansions, jobs, employee pay raises, etc. Instead, they unleashed a flood of stock buybacks. In fact, in 2018, after the massive giveaway went into effect, only 43% of S&P 500 companies recorded any research and development expenses at all. The majority of companies spent not a single penny on new innovation. And you can see why. It's a sick incentive structure. Why take a risk on building something new when you can just reward yourself and service the stockholders by artificially goosing your own stock price? And a compelling example of exactly this, journalist Rana Foroohar chronicles how Apple stock performed far better in years that stock buybacks were done than in the year that they revolutionized music with the release of the Apple iPod. So if short-term shareholder profits are all that matter, Apple is duty-bound to engage in market manipulation, not to invent new products. Third, stock buybacks enrich executives and wealthy shareholders at the expense of workers, fueling world historic inequality. And the legalization of stock buybacks combined with other Reagan-era radical reforms, things like crushing unions, slashing taxes on the rich, and no-holds-barred free trade, they have combined to create a second, more extreme Gilded Age. If you want to know why it feels like our whole society is coming unglued right now, this is a great place to start. The hunt for both the causes and the culprits. Our national understanding of corporations has actually gone through a few different evolutions over the course of our nation's history. In the early days of our republic, the founding fathers had quite a complex relationship with corporations. Now, on the one hand, the early American project was effectively based on for-profit corporations like the Virginia Company. Some of our early experiments in democracy and agitation for revolution, they were actually inspired by rights of representation that were granted not by a constitution, but by corporate charters. Those governed the colonies. On the other, the founders were, of course, deeply skeptical of concentrations of power. In his book, We the Corporations, How American Businesses Won Their Civil Rights, Adam Winkler writes about Sir William Blackstone of England, one of the most influential thinkers on corporations, whose writing on corporations is still cited regularly by our own Supreme Court. Blackstone explained that the entities must serve a dual public and private purpose. They were not, as conceived of now, simply for-profit entities meant to enrich their owners. Instead, they must be, quote, for the advantage of the public, or else their charter would be completely denied. Now, our founders, too, believed that corporations must serve some public interest. According to The Atlantic, many early stock certificates bore an image, a factory, a car, a canal, representing the purpose of the corporation that issued them. It was a reminder that the financial instrument was being put to productive use. Early corporations were chartered for a specific task, say building a canal. They had charters of limited duration lasting either 10 or 40 years, and they were frequently terminated upon the completion of that specific task that they were chartered for. Now, after the Civil War, corporate advocates, they used the courts to claim greater and greater power for themselves. In fact, in a disgusting turn of events, at the same time that the rights of Black people under the 14th Amendment were being stripped away and the Jim Crow regime architected, corporations were using the 14th Amendment to great effect, grabbing for themselves new and unprecedented rights. Again, per Adam Winkler, quote, between 1868, when the amendment was ratified, and 1912, when a scholar set out to identify every 14th Amendment case heard by the Supreme Court, the justices decided 28 cases dealing with the rights of African Americans and an astonishing 312 cases dealing with the rights of corporations. Now, this brave new world of corporate rights led to the first Gilded Age and robber baron era, which allowed wealth inequality to skyrocket to previously unimaginable heights before being checked by the fallout of the Great Depression and FDR's New Deal era. The Reagan era would see corporate rule on steroids as he and all the administrations after him embraced new radical views on the role of corporations, now seen as exclusively meant to increase short-term shareholder value. It was under this new extreme philosophy that buybacks would be legalized and come to metastasize into the economy, eating menace that they are today. And in Washington, in spite of these shocking figures cited here by Ralph Nader, there seems to be little interest in change. In a sign of how timid and unequal to the task our current political leadership is, rather than take the obvious step of just banning stock buybacks altogether, President Biden passed a measly 1% tax on stock buybacks. It's had precisely the impact you would expect, which is absolutely nothing at all. He's now saying that companies which seek CHIPS Act subsidies must forgo stock buybacks for a period of 5 years, a limited reform impacting a small number of companies. And in his boldest stance, Biden's new budget calls for a still piddling 4% tax on stock buybacks, which is also unlikely to do really much of anything at all. Buybacks should be banned, period. End of story. According to Adam Winkler, at the founding of the Republic, Thomas Jefferson warned of, quote, the aristocracy of our moneyed corporations, which dare already to challenge our government to a trial of strength and bid defiance to the laws of our country. Our government is no longer challenged by moneyed corporations today. On the contrary, they're quite comfortable with rule by corporate power. That 90% number stunned me.
Of course. Yeah.
Hey guys, ready or not, 2024 is fully upon us now, and Sagar and I have been brainstorming ways that we can really up our game for this critical election.
Yeah, we rely on our premium subs to expand our coverage, to add staff, to upgrade the studio. We just want to give you the best independent coverage of this election, which is possible. So if you can help us out, become a premium subscriber today, breakingpoints.com, or the link is down here in the description video. It really means the world to us, and if you like what we're all about, this is the best possible way to keep us 100% independent, working only for you.